Hello, friends. Welcome to the Thrive Forward podcast. We are in a continuation of our series on sustainable investing. We have so far talked about topics related to kind of 101 sustainable investing. Last week's episode, we talked about proxy voting and impact bonds. And today we're going to talk a little bit about investing for the future. What does that mean? Well, that means we're welcoming one of my dear partners, Emily Lee from Impacts Asset Managers. She is the Vice President of Business Development and a key partner that I utilize in my investment management when it comes to sustainability for my clients. Impacts has been around for 50 years. They're not new to this game, and neither is Emily. So we're going to talk a little bit about how we focus on where we are right now. Why is there all of this popularity around sustainable investing? What do women and future generations like millennials and Gen Z have as an impact to sustainable investing? And then what is it that you as the end investor can really make an impact on? Why should you be choosing this? And what does that impact have on the future? So I hope that you'll tune into today's episode. I hope you'll share. Sharing on the podcast allows us to be able to continue to do this, provide free educational resources to our audience. And by you sharing, doesn't cost you anything to do, but it allows our message to be continued to be spread and more education and awareness to be built, especially around this topic of sustainability. It is so important. So continue to press play. Let's head over to the episode. All right, Emily, thank you so much for joining the Thrive Forward podcast. I'm grateful for you and Impacts' partnership and for you taking some time out of your busy schedule to hang with us on the podcast.
Yeah, thanks for having me. It's exciting. Thanks so much.
Well, you and I come from very passionate backgrounds around sustainable investing. And I was actually at the eye doctor yesterday, and I was talking to the people in the building about what I do and how I focus on sustainable investing and investing with purpose and things that are good for the people, the planet, and profit. And they were like, that exists?
You got to spread the word everywhere you go.
That exists? And I was like, yes, it does. Here's my business card. Here's my business card. Here's my business card. Right. No. But in all reality, I think that there are so many people that have no idea that they can actually align themselves with maybe not necessarily their value system, but how do we progress the world forward in a way that makes impact for the greater good when it comes to people, planet, and profit altogether. I call it the three Ps. I don't think I invented that. I think I robbed that from somebody else, but
no, you can always take it and run with it. Yeah, I think that's great, especially too in the sort of in the public market space and where you know in your 401k and your IRA and like the everyday places where you tend to do more saving. There's always areas to make that impact. So I love that you're spreading that message and that we get to talk about it today.
Yeah. So I think we've talked about a couple of different things already on the podcast this month. So we've talked about in general, what is sustainable investing. So if you guys are just joining this episode of the podcast, tune back in to the first episode in October. We kind of run through that. We won't go through 101 today. And then we've talked about impact bonds and proxy voting. And then we've talked about how we can make sustainability come alive in other aspects of our lives. So where we shop, where we give, where we work within our 401ks, all of those different things. But I'd love to hear from you kind of what is the current status of sustainable investing? Why has it grown in popularity? And maybe where is it going into the future? Why should an end investor think about this as something as a potential?
It's a great question. You know, I'm at a firm that's been doing this for 50 years. So we might have been a little ahead of the popularity curve, if you will, in the space. But what's exciting is that it's always evolving. There's always more data to capture. There's more conversations to be had with companies. And I think there's just been so many issues that have been kind of bubbling up to the surface, whether it's, issues of racial inequality or social issues that we've all faced during the pandemic, obviously environmental issues, climate change issues. So many of these things, not only are individual investors taking a look at and thinking, geez, how is this representative in my portfolio? How can I not only not be invested in things I'm not comfortable with, but how can I actually make that impact beyond performance to have a better environment, a better society? And I think at the same time, we're coming into this nice inflection point where companies, whether driven from their own sort of recognition of the business case around sustainability or being pushed there for legislative reasons, cost savings reasons, they are also taking a closer look and a more transparent, look, if you will, on issues around sustainability. So I think, at our firm, we really have this viewpoint that we're at a transition point right now where we're transitioning to a more sustainable economy. What we mean by that is, for so long, money tends to be invested in a very short-sighted way where you're just focused on profit at any cost. And we're realizing, and companies are realizing, governments are realizing that actually does have a big cost to society and to the environment. And so thinking and framing it in this way, I think is a good way for us as asset managers to move forward. And I think as investors, there's so many more options today out there, which I know can be confusing, which is why they've got a great interpreter in you, Shannon, to sort of filter through the noise of what's sort of, true and authentic sustainable investing as opposed to what's maybe a lighter flavor, if you will. So I think, and we can run through some of the numbers of the growth, but we really feel like the trajectory is strong. And I think the great thing too is conversations that you have with clients, they'll bring up issue areas that you'll then bring to me. And it's always a constant conversation about, how about this? What are you looking at for this? So it's not sort of a one and done assessment when we think about sustainability. It's constantly evolving, which I think is exciting.
Yeah, absolutely. I could not agree more. In fact, when I explain it to clients, I think it's actually the investing of the future.
I like that.
Because I think if we start to look at the change and shift in wealth period throughout demographics, both looking at that from the change of the great transition of wealth over the next 10 years, there's, $30+ trillion in assets that are going to transition from women or from men to women, and then maybe to the next generation after that. Right. And really, we start to see the younger generation, the millennial generation, Gen Z, very conscious about social issues, very conscious about what's happening in the world. And so I think they're going to ask more questions about what's actually happening with my money. And the workforce dynamics change too. Who are those individuals in leadership roles? And that, that's a common topic addressed through sustainability, right? Is what does the C-suite look like? What do director level and above look like? How is that workforce compensation looking like from a actual, not compensation of money, but compensation of the people that are in the seats, right? And I think that that becomes more and more important as we start to shift to the hands of wealth. Have you guys seen that in some of the research that you've done around impact and sustainable investing?
Yeah, we definitely have it. It's really interesting. I feel like, I've been in this space for about 7 or so years, and some of the early research reports were saying, oh, this is, investing space. And now it's sort of, I feel like it's growing to be kind of, could be something for everybody. But you're right, with this shift in wealth, there's certainly, I think, a bias to the younger generation of not just even wanting sustainable investing, but sort of expecting that if they're working with an advisor, that, of course, they're going to be able to have these conversations about what their values mean to them. They're going to have transparency around the impact. So kind of, I love seeing that shift in mindset. And we even work with advisors who, who've got, families they're working with where they're trying to develop, what is the values we're trying to go after. And it's going to be different sometimes generation by generation, but the sort of beautiful thing about the sustainable investing space is you can kind of tweak and emphasize where you really want to have the most impact, whether you really want to focus on, like you said, gender and diversity, or whether you want to think about environmental issues. So we've certainly seen the momentum continue to grow. I think right now it's 1 out of every $3 in the US is invested in some form of sustainable investing. And when you kind of dig into the deeper trends, climate always continues to be a big trend, but we're seeing now for kind of the first time workforce issues really come to the surface. And I think that's been obviously fueled by the pandemic. And so having not only investors kind of recognize and asking these questions about, where they're investing and also where they're working, but having companies in turn recognize we need to kind of get ahead of these issues and really reflect better, from our corporate boardrooms on down to really who our customers are and who society is. So I think it's a really exciting time.
Yeah, I sat in a room, this was probably like 3 years ago, even, but it was pre-pandemic, right? I always talk pre-pandemic, post-pandemic, right? But I had gone to this seminar or something like that, and it had nothing to do with finances. It was actually for entrepreneurs, because I love to like be in rooms with different thought processes and what's going on. And it was this woman who was talking about research and research based on different generations. And she was talking about Gen Z, and everybody did with millennials, and I happen to be a millennial, and everybody put everybody in a box, and like, They don't know how to work. They always want these things. They like computers. What's their problem? Like now that becomes the aspect of like Gen Z, like they're pushing the envelope, they're protesting, they want all this change, and they want to like have flexibility.
So many demands.
So many demands, right? That seem so, I laugh sarcastically because I feel like everybody's always wanted that, but nobody's actually really talked about it. And she sat in front of us, and she's a marketing expert. And she said, Gen Z, if you're not doing something good with their dollars, they absolutely will not want to work with you. Mm-hmm. So as we look at these transitions of wealth as individuals move, and we start to hear, there are many statistics out there that say, in the first year, a woman inherits wealth from her husband or from family members. They transition and move to a new advisor. I have seen that in my own practice. People have moved to me and inherited wealth because they didn't align with the values, or they didn't have the questions that were asked from a service perspective. And more women are more concerned with these elements. And then if we start to look at millennials and Gen Z, we will start to see some of those things as well. But I'm kind of curious, what are those elements that are most important as we go forward on a sustainable? What is the impact really? I think we talk about it from a big picture, but when we start to get granular, what are the things that are actually happening, and what can we see in the future?
It's a great question. So, one of the things we do at our firm, we do a lot of deep, what we call ESG analysis. So we look at the environmental, social, and governance. And I know you probably covered that in your kind of 101 session, but it's so much more than just sort of a checking of the box. It's really finding out how transparent is the company around a lot of these issues. So how are they dealing with climate change risk? How are they thinking about diversity? What sort of practices do they have to really improve on diversity within their organization? So a lot of different factors they're working with. And what we're finding is from both a research perspective as well as the engagement work that we do. So we go beyond just the scoring of companies to really talk with them, push them forward, ask them questions around these different ESG issues. And, it used to be sometimes back in the day that was a bit more combative with public companies. It was sort of okay, ask your questions, file your proposals, but it's not going to be something we're really going to deal with. And we're more and more seeing maybe not companies being super proactive, coming to us, asking us about what the big issues are, but definitely more of a dialogue that we're having with companies. Companies kind of stepping up and saying, hey, this is what we're doing. What do you think? How can we be better transparent around these issues? So a lot of times those conversations are making the business case for the companies. And I think through, whatever pressure angles it might be, they're starting to realize we need to really be proactive when it comes to a lot of these ESG issue areas, because if not, it's really a risk to the company, right? It's going to be a financial risk, a reputational risk. And so I think it's an interesting time where we're kind of coming together with that, companies being more aware of having to really focus around sustainability, while at the same time, clients are really demanding it. So I think those things are helping to, again, continue to kind of push it forward, to make us really have to focus in on issue areas, have to really think about what's the long-term goals of these different companies. And, especially with like small cap companies where maybe they can't be as transparent around the good things they're doing. We see them kind of starting from the ground up to build their company around a framework of sustainability, which I think is really exciting. And I think our feeling is, those companies that are sort of unwilling to transition or unable to kind of adapt to this new environment are going to face face risks. And so that's why we tend to really try to work with and invest in those companies that are really looking forward.
Yeah, I think a lot of times, especially as an end investor, we forget how you and I work in this every single day. So we can see the intricate parts of things. But when you're the end investor and you put everything on autopilot and you walk away from it and you do all the other stuff that's more important to you than dealing with this, which is like 90% of the people I work with, right? They're like, you got this, Shannon. Like, I don't want to worry about it. The reality is when we give up that control, we lose the impact. And I think we actually are owners in companies, right? Like when we are investors, we are owners in a company. And even if we're mutual fund owners, we're owners of the mutual fund and therefore, somewhat owners of those stocks that are within the mutual funds, right?
Definitely.
So we should have, our money is helping companies grow. I've explained it very remedial for some of the folks that I work with. And some people in our industry might laugh at it, but when you own it, the stock market is like a popularity contest. When somebody buys one stock and everybody's like, yeah, that's really great, I'm going to go buy it too. Then the stock price goes up and you make more money. And, when everybody decides they don't want it anymore and they sell, then your stock price goes down. Right. And that's where I think we don't take the ownership of understanding the integral parts and how our wealth can actually help these companies continue to be successful and continue to do things that might not actually be doing the things we want, right? I'm a mom. I have 2 little girls. I would love for them to see a world to live in the future, right? And so, global warming is something I'm concerned with. What are we doing to make sure that they physically have a planet to live on? And that's a huge concern of mine. I also want to make sure that all of their friends have equal opportunities than them. Just because I have white babies doesn't mean that they shouldn't have the same opportunity. Brown and friends of different pigmentation shouldn't have the same opportunities. So I think that that's where we start to not only realize it's not just our 401k, it's that we're actually owners in those companies. How would you say this transition or popularity of sustainability? We know it's been around for a long time. Everyone, welcome to the party. We're happy you're here.
Always welcome.
Always welcome. Beer might be a little cold, but we'll freshen it up for you. But how do we explain some of this ownership translating into the future impact? What does that look like in the future? If we can transition wealth into sustainable investing, what could that world look like for us in the future?
Yeah, it's very powerful. And I think it's a great way to think of it from that sort of, ideal standpoint and the world we all want to live in and the kind of world you want to, leave behind for your children, and then kind of think back and say, hey, what can we do today to help us on that path, right? Because obviously some of these issue areas not going to be solved tomorrow. And even with, the engagement and the conversations we have with companies, it sometimes takes years, but it's kind of fun because we've been doing the engagement work for so long to look back and say, all right, well, maybe that took 4 years, but look how far they've come from those initial conversations. So, I think starting from that place of really what's that ideal sustainable society where we're all living harmoniously with nature, with society, we're all prospering in a way that doesn't take away from tomorrow's generation, right? Thinking about sort of sustainability characteristics. So it's a great point you made about these public companies, right? They're succeeding and existing because of our investments, and you're very much an owner in that company. And so as an owner, not only do you have the right to sort of see the company make changes, but you want the company to be really transparent about what they're truly doing, right? I think we can all see, headlines or blurbs on a company's website about them supporting certain things, but how is that actually translated into the decisions they're making every day, or the workforce that they employ, or how they work within their, supply chains across the world? So I think it is really important to really ask the tough questions, to, what we like is companies to really make firm commitments. So rather than coming back and saying, sure, we consider climate change and we're all for fixing the planet, but okay, well, what does that actually mean? Are you making a firm time-bound commitment to reduce your greenhouse gases? Are you, a signatory to various UN environmental principles. So getting that transparency, I think, is really important. So I think that work is more important than ever. And again, I think having consumers and owners of these companies kind of voice their concerns and work through an advisor like yourself, and then knowing you've got firms like us out there that are on the ground kind of doing this engagement with companies. I think there's nothing we can't accomplish, right? Knowing it's going to take some time, and it's going to take maybe some legislative pressures, some consumer pressures, maybe more regulatory pressures where they're sort of forced to report on sustainability to really be listed on the stock market and things like that. So there's things like that we're seeing happen outside the US that I think could now come in here. So I guess the big takeaway is there's lots to do, but I think there's no reason that especially when it comes to the responsibility that public companies have, that we can't continue to really push them forward and maybe to increase the speed of change, because in the past we've seen it taking a lot longer. And I think right now there's so many catalysts going on that it's a really important time to really focus in and really have those conversations.
Yeah, the word pivot was pretty popular last year. I feel like this is a pivotal moment that we're sitting in, that we have the opportunity to do that. You casually slid in what's happening overseas, and you and I know what's happening overseas, but could you share with the audience a little bit what you meant about more accountability on the stock market in other spaces around sustainability?
Yeah, definitely. I think, we've certainly seen a big increase over the past couple of years where ESG is a little more understood. It's a popular topic. You're sort of seeing it talked about. We're definitely still a few years behind Europe, where ESG is very much a part of the asset management culture across the board. It's not specifically, firms like ours, like Impacts and others. It's more ingrained into understanding that to truly value a company, you need to be looking at these ESG factors, because those are really key to the valuation. And we're also seeing more pushes from a regulatory standpoint in terms of reporting on sustainability aspects. There's various markets where you have to have some sustainability reports in order to kind of be listed and have investors. So it's a little more understood there that of course they're going to be more transparent about this work. So, while we certainly invest in global companies, it's I think the US has more work to be done in terms of, kind of encouraging and I don't want to use the word forcing, but sort of encouraging and having to require, I guess is a better word, require these companies to really report on these sustainability metrics. And that'll make it easier too for folks like us to really, again, see that information. Because right now we have to do a lot of hands-on work to find out the information, especially like you said, when it comes to gender criteria and even more racial criteria. Then there's differences certainly here in the US and abroad in terms of how we even get that level of data and whether or not it's provided to us. So yeah, I think if we see sort of the growth of the sustainable space in Europe especially, it's much bigger than it has been in the US. And so we see that kind of as trending towards us. So I think there's lessons that can be learned there. And especially, a lot of these issues, but especially, climate change and with the COP26 conference coming up, these are global worldwide issues, right? They're not issues that can be sustained just in our backyard or the backyard of other countries. So I think those are really issue areas that are going to be across the board. So it should be interesting to see what momentum this kind of continues and what change it creates.
Yeah. And I think the transparency, I could go off and have a whole episode about transparency in our industry, right? I think the transparency of the end investor really understanding that, or the do-it-yourselfer, because not everybody utilizes a financial advisor like myself. And that doesn't mean that they shouldn't have access to the information to be able to do their job, right? Of managing their own money. And I think if they can, just like you can go on to Morningstar and you can find an evaluation of the returns and who does the portfolio and what's, if it's a mutual fund, what are the underlying securities, and you can find all of that stuff. Also, you can find it for a fee, right? Like the end investor has to pay for some of that stuff they can't get all of the information, and it takes a lot of research. So how can we be more transparent for individuals to be able to do that research themselves, or even companies? Like I think about, Europe has really been very forward with the requirements of retirement plans and pension plans when it comes to offering a sustainable option. And that's the question I get so often from clients is, well, how do I do it in my 401k? And how do I offer sustainable investing in my 401k? I don't, is that even an option for me? And
we get that question a lot too, because that's like when we think about, like you said, how you've talked about, how you can have a sustainability focus around your daily life and where you shop. But like when we think about where we invest, the first place is for most of us that 401k plan. And so I've had that question many times too. And it's just for, we could go off on sort of, like you said, the transparency and the legal hurdles we've had in that space. But there have been some roadblocks to kind of putting sustainable investing in a bit of a box where it was not quite safe to go there for 401k plans and the various Department of Labor rules. And we've seen that shift and change through different political environments. But I think, we're at a time where it's opening back up and it's saying it's okay to offer these options. So my advice, and you probably say the same thing, Shannon, is go to HR and say, I noticed we don't have any sustainable investing options on here. Can you look into this? And as every 401k plan is going to have a plan sponsor and provider, and there's options out there. So it might not be that they've sort of turned on those options or made them transparent enough, but I think that's always a great place to start to make sure that you're getting those options on there, because that's very important to a lot of folks.
Yeah. And I'll just caveat the aspect of like, get a group of people who are interested in it too. The more who make noise, the more who get listened to. Because if you're just one individual, sometimes it'll be like, yeah, okay, whatever. We'll deal with that whenever. But if you have a group of individuals that are really passionate about this topic and you want that option available, that's something that you can go to. I always say in numbers, it helps, right?
Yeah, that's a good point too. And we've seen kind of that too when we think about like trends and flows of big dollars to this space, right? I mean, it took a lot of on the ground sort of student work to push, university endowments to invest more responsibly. And we're starting to kind of see that momentum with Harvard, who was one of the big holdouts there for so long, finally kind of making some fossil fuel free commitments. So you're right. I think if you can band together, the louder your voice can be, and especially with your 401k, that's your hard-earned money. It's a very key part. Like I'm sure you tell people, Shannon, of like your initial investments that you want to make sure that you're maxing out, that you're making, perhaps your company matches. So yeah, definitely there's options out there. So keep pushing the envelope if your company's not offering any, because they should be.
Well, and if we think about the greater impact, if you can make that push as an employee to your employer, there are so many assets within retirement plans that if we can get to a point where that is an option, again, we're never saying that it has to be the only option. It's just saying that it's accessible. And you mentioned this a little bit earlier before, that fear of not having it within a 401k was mainly based off of the history of returns and the limited accessibility, because when you go into a sustainable model, the market shrinks, right? You don't have full access to every single market. Why is it that people have always thought that returns are going to sacrifice when you align yourself with a sustainable investment strategy?
Yeah, the question that always comes up. We like to talk of it as an old myth of sustainable investing, but you're right. It's definitely one that's still out there, and it's one that I'm sure you have conversations with clients about, because it's a legitimate concern people have, and rightly so, right? I mean, I think this space, like I said, we started 50 years ago. Back then it was definitely more of an emphasis on let's exclude certain things from the portfolio that don't match our values, whether historically it was more religious-based values, and now maybe more it's values around social consciousness and climate change related issues. And so, like you said, when you start excluding, and that's the real focus, you are limiting your investable universe, right? And that can affect affect your performance over time. I think where we've gotten to now is firms like ours and others who really are taking the time to do the research on these companies and really rate them from an ESG perspective, not just use a third-party data provider or not just use, what the company's telling us, but really get in there and do the due diligence. We're truly finding out what their profile is. So I think that's going to continue to be really important as well.
Yeah. And I think that a lot of times, at least the conversations that I have with clients is if you didn't have to sacrifice return and you could align with making a greater impact with the planet and people while not suffering from a profit perspective, would you do it?
Right.
And 9 times out of 10, the answer is, and I would even say like 9.9% of the time.
Yeah, 9.99. Yeah.
Yeah. And like people are like, well, yeah, why wouldn't I do that? Right.
Exactly. Yep. And the beauty part is like, yep.
It doesn't have to be political. I think so many times we think that, well, I get this a lot and I've got it throughout my career. Well, you're just a hippie, you're a tree hugger.
I get that too. Okay.
Yep. I was raised by hippies. My parents were very much so. They're artists and hippies. The fact that I work in wealth management, they're like, it blows their mind every single time we talk about it. But why is it that way? Can we just like get rid of that myth that it's not politically based?
Yeah, I know. I wish we could, because I think there's other folks in your seat, Shannon, who don't even want to bring up the subject, right? Because they feel like they maybe their personal values as an advisor are not the same as their clients, or maybe they don't want to, offend. I had an advisor years back who didn't want to put a mention on the website about sustainable investing because they thought that would show that they really believed in certain things that maybe they didn't. And so it's a bit of a minefield. I agree, but I think you're right. I think there's so many ways to kind of look at the angle from a performance standpoint, from a risk standpoint, right? If you think about, not to get onto negative examples, but you think about like the BP oil spill or the Equifax data breach or, Volkswagen, et cetera, while investing with a sustainable lens and with this ESG perspective can't predict everything that's going to happen, it is a big risk avoider tool, right? So while you might have that debate about performance, the fact that you can be avoiding companies or sectors of the market in general that are very volatile, are based on past performance and past history, are again you couldn't predict what was going to happen, but you can see that those issues and those sort of scandals that happen with companies, their stock price plummets. It continues to plummet for years to come. We've seen that with both environmental issues, but also with a number of sort of sexual discrimination scandals we see go on with companies. It's not forgotten when it's factored into the stock price. So I think there's that big risk perspective of this space as well that's important to look at. And so you certainly could have folks that maybe they're not super passionate about one of these issue areas, but they like the fact that ESG is long-term. Like you said, it's sustainable investing is smarter investing. It's investing of the future, right? So you have all sorts of, a variety of reasons why you've come to this. Some people might, again, just be thinking about it, that it is a long-term viewpoint, that it factors in risks, that it's thinking about where we are in terms of this sustainable economy. So.
Yeah. And I would argue that there are some things that maybe aren't like hot button social issues, right? Like some people might like go into climate change and, racial unrest and things like that as hot button issues. And that might be not as important, but we can start to talk about, you just mentioned it, Equifax data breach, right? Like the aspect of security within companies, the aspect of privacy sharing and data sharing. And when we go into, Facebook would probably be a really great one to talk about when it comes to privacy and data issues, right? Everybody likes Facebook stock because it goes like this, right? But everybody wants to complain about the fact that Facebook shares all your data, right?
Right.
So I think it's that give and take. Like, what is it that's actually really important to you? That's not a political issue either. I mean, some people could argue that it's a political issue. You could argue everything is a political issue. Well, whether I wear bracelets or lipstick could be whatever you want it to be. But that being said, I think it's this aspect of, again, looking at it. Do you want something better for the people that are around you? Do you want something better for the planet? And do you also want to make a profit at the same time? And I bring it back to even like a fourth P, and that's planning. Because the reality is, if you plan for yourself from a financial planning perspective, and you actually are looking at it as, I have enough income to live off of, I have enough savings, I have enough access to different tax implications, like I've got enough tax-free, I've got enough taxable, I've got enough tax deferred. If you don't understand what I'm talking about, it just means like, when can you access that money and what will be the tax consequences of them? If you've planned for that and you don't need 32% return, which I think, some people like think that they need to have double digit crazy returns all the time. The reality is, from a planning perspective, I don't ever use anything above 8% for a financial plan. Right. And that's on the high, more risky side of things.
Right.
So when you look at that full picture of the P's, it's starting with the planning part of it, making sure that you are set for yourself and your family and what's important to you, and then look at the overall impact of the things that you're invested in order to make that impact in the future.
I like that. Well said. Yeah, because I think you're right. I mean, I think, you can break down so many of these issues, but at the end of the day, we feel like we really can't choose publicly traded companies. We can't really be responsible investors if we're not factoring these things in, right? And so, so much of a company's value now, used to be based on those tangibles, the brick and mortar, the buildings, the land, what they were producing. And it's now switched where I think it's now, 90% of the S&P company's values is in intangibles, which is reputation, which is brand, which is, customer view. So, while you can go down a lot of different holes and paths for this space, at the end of the day, incorporating, looking at how a company is dealing with these issues is really saying, how resilient is this company, right? How well do they, transition through risky times like we've just gone through, right? Are they really leaders in their industry? Are they going to be in a better position than their peers because they're thinking of these longer term issues? So yeah, there's so many different ways to look at it, but that's why it's great folks have you to to translate all this noise. And I love the 4 Ps. That's great.
Awesome. Well, thank you, Emily, for hanging out with me today, and our audience in the future as they listen to this. I know that Impacts has a lot of really great resources, both for myself as an advisor, but also for the end investor. Is there any resources or things that you all would make available to the audience to listen to for their own indulgence?
Yeah, that's a great question. There's so many great things out there. Our website is ImpaxAM, so IMPAXAM.com. One thing I love on the website is we've got blogs from some of our research analysts and portfolio managers. We have a recent paper on there talking about the research behind gender diversity. We've got some upcoming articles on the COP26 event. So just things around various E, S, and G topics that you can kind of look into. We've got some videos on there as well about how to invest like a feminist and what ESG means. And so, yeah, I'd say definitely play around in there. You can find some interesting stuff and it'll lead you to other places as well. So a simple Googling these days of sustainable investing will set you for quite a while, which is great to see. I think there's so many articles and so much interesting stuff about it, much more than there used to be. So appreciate you asking me that.
Yeah, absolutely. Well, thank you so much for your partnership and your time today.
Thank you. It was a pleasure.